welcome to my podcast, Love and Courageous. I'm the host, Demetris, and today I will be talking about two Democratic lawmakers who are proposing tax overhauls that will eliminate federal income taxes for people in America. There are two different bills that are proposed by two different Democrats. One, Senator Cory Booker of New Jersey, who is proposing a bill called Keep Your Pay Act, which would increase the standard deduction to $75,000 for married couples filing jointly. The other Democrat senator is Chris Van Hollen of Maryland, who is proposing a bill called the Working Americans Tax Cut Act, and is tied to the Massachusetts Institute of Technology's living wage research, because MIT calculates that a single worker needs annual income of at least $46,000 just to afford the basics, and the plan will introduce a cost of living exemption at that level. Now, under both of their proposals, millions of low and middle income households would secure much of their income, ranging from $75,000 to $92,000 for married couples from federal taxes. So I'm going to go over the difference between these two bills that they are trying to propose. For Chris Van Hollen, the Working Americans Tax Cut Act, it could qualify married couples for a cost of living exemption of up to $92,000. Incomes under those thresholds wouldn't be taxed by the IRS, effectively shielding many more low and middle income families from taxes. About 130 million people will get a tax cut under the plan. Now, however, the exemption isn't exactly a deduction, which is available to taxpayers at all income levels. Chris Van Hollen's cost of living exemption would include an income phase out that would kick in above $80,500 in annual earnings for a single worker. Under the plan, middle income households earning from $27,000 to about $153,000 will get an average tax break of roughly $1,000 to $1,300. For Cory Booker's plan, a bigger standard deduction, his bill is called Keep Your Pay Act. And because the standard deduction is available to all taxpayers, it would benefit higher earning households. For a prime example, a married couple with a combined income of $300,000 and no children will save about $10,000 a year in federal income taxes. Cory Booker made a statement and said, I quote, "No income tax on the first $75,000 families earn would be a game changer for working people. This tax cut would immediately put more money in your pocket every month to deal with the high price of everyday expenses and an unexpected emergency or to plan for the future." Now, with both of these proposals, the question is who would really benefit from it. So according to the Tax Foundation data, most federal income taxes are paid by the country's highest earners. The bottom 50% of America's households, those earning less than $50,400 a year, pay about 3% of all income taxes, while the top half accounts for 97% of U.S. tax revenue. Chuck Marr, a vice president for federal tax policy at the nonpartisan Center on Budget and Policy Priorities, made a statement and said, I quote, "Affordability is always an issue for Americans. The cost of health care is high. Housing is expensive, and Trump has put these tariffs on that have increased costs across a range of goods. It's natural for policymakers to think about how they can respond to that. But neither Booker nor Van Hollen's plan would help people get a larger tax break if their income is already below the current standard deduction. These are poorly targeted," adding that offering tax credits is often more effective in helping low-income families rather than boosting deductions. The poorest 20% of households wouldn't benefit from Chris Van Hollen's plan because their federal tax liability is about zero. The biggest beneficiaries would be those in the middle 60% of households. Now, another question for these bills that are proposed is how would the tax cuts be paid? And Cory Booker's proposal would pay for the tax cuts by closing loopholes and raising the corporate tax rate, while Chris Van Hollen's plan will add taxes for people earning more than $1 million. According to the Yale Budget Lab that did an analysis, Chris Van Hollen's plan would be budgeted neutral over a decade, with its tax cuts paid for by the millionaire tax. And Cory Booker's bill would cost $5.3 trillion over a decade. Now, neither one of these bills has been moved forward, and it don't seem like it will be moving forward, especially with Republicans having full control of Congress. Now, however, these two bills are being proposed due to Donald Trump's big beautiful bill that was signed into law last year. Because Donald Trump's big beautiful bill has mainly been helping high income households, while also cutting spending on programs that help low income people in America, such as food stamps and Medicaid. Chris Van Hollen made a statement and said, I quote, "We should finally have a tax code that doesn't just benefit the very wealthy, like the Trump tax plan, but provides some relief to Americans who are working very hard to just make ends meet with the paycheck they got." Now, however, Republicans say the big beautiful bill is helping working families by adding new tax breaks and making permanent some cuts from the 2017 Tax Cuts and Jobs Act. A representative, Jason Smith, who is a Republican from Missouri, made a statement and said, I quote, "Just in the past week, traveling through southeast Missouri, I heard directly from a young lady who's a waitress who had a record refund of nearly $12,000 because of all the different provisions in the new law. This makes a difference for people who are just living from paycheck to paycheck, trying to put food on their table, clothes on their back, and gasoline on their cars." Now, I will say this. I don't know no waitress that's going to get a refund of 12,000 dang on dollars. That's bullshit. That's bullshit. 100 billion%. I'm not even no waitress. And dang on, I'll tell you right now, I know for a fact I make way much more than a waitress. And my refund sure hell ain't no 12,000 dang on dollars. So that most definitely do not make sense. I personally feel like instead of them doing tax breaks, they need to increase the minimum wage worldwide. Like, the minimum wage at least needs to be maybe $20 or $22 an hour. There should be no reason why you have companies out here only offering $16 an hour or $14. That is insane. We need to have rent control is another one. But they need to pay people based off of the cost of living. That is what we need in America. In my opinion, I don't think tax breaks is really going to help that much, because what really matters is how much you make an hour. And these raises at a lot of these jobs are not that good. So if you don't really have a good raise, I mean, you're doing tax breaks, which, I mean, I guess that's nice. But it's just the hourly pay, it matters the most in my opinion, because one, rent goes up every year. And so how much you make an hour, it needs to align though with the cost of living. And it's not doing that. So that is the issue. Because in my opinion, I don't know, the tax rates just don't seem that beneficial. But we will see what the future holds. Now we'll get into the Black History Fact for today. Black History Fact will be about Wallace, also known as Wally Amos, the founder of famous Amos cookies. Wally was born in Florida of Tallahassee in 1936 and moved to Harlem as an early teenager to live with his aunt, Della Bryant. He left New York after dropping out of high school, and he earned his GED shortly afterwards and joined the Air Force from 1954 through 1957. Before starting his business, he worked his way up in talent agency. He started in the mailroom at William Moore's agency in 1957 and became the first black talent agent in the industry. Then he moved to the West Coast in 1967 to own his agency and started baking on the side. It was the financial help of musical legends Marvin Gaye and Helen Reddy, who gave him $25,000 to get started, that Wally opened famous Amos Cookie Company in a shop on Sunset Boulevard in 1975. The cookies were known for their natural ingredients and for being preservative free. The company made $300,000 in its first year and reached $12 million in revenue in its first 5 years. The one Los Angeles location grew into dozens of stores nationwide and packaged products being sold in grocery stores. In 1986, President Reagan gave Wally one of the first awards of entrepreneurial excellence. After some financial troubles, Famous Amos was bought for $3 million in 1988. Wally worked in the Fiero Group on and off and came back as a spokesperson in 1999. In selling the company, Wally lost the use of his name and his image. He sold baked goods under other names like Uncle No Name, Uncle Wally's Muffin Co., and the Cookie Kahuna. He also became the spokesman for the Literacy Volunteers of America, an organization focused on teaching adults to read. Wally Amos passed away on August 13th of 2024 at the age of 88 due to dementia. That is all for today. Thank you everyone for listening to my podcast, and I hope everyone have a lovely day.